Now let's have a look at other currency pairs, and we start with euro dollar. If we look firstly at the weekly chart, we can see that there was a sizable weekly bearish candle formed last week, and actually this candle engulfed the body of the previous candle. It didn't engulf the whole candle, but the body it did engulf. As a result, the weekly pivot points indicator shows us that the pair is now trading in the negative territory below the pivot point of the weekly analysis at 106.79. The first weekly support, according to this tool, is located at 105.67. And the second weekly support is around 104.95. So we target approximately areas like 105.60 and 105 to the downside. 105 is surely a psychologically important level for the single currency, and this level has already acted as important support and resistance level before that. We can see that here around 105 is the minimum level of the 5th of December, and late November minimums are also not far from this level. So I think that if we get at this point of 105, it will take some time for the bears to try to get past this obstacle, past this support. But before we got there, we can see that the pair is currently supported by the area of 106. Approximately here lies 50-day moving average. The line is almost horizontal, and it is providing some support for the pair. On the upside, another daily moving average is acting as an important level, and this time this line is acting as resistance. I'm talking about this green line, which is 100-day moving average, and which also corresponds with the weekly pivot resistance level located at 107.51. In my opinion, this is the upper border for the euro this week versus the US dollar. So I don't think that we will be able to get higher past this point. All in all, daily indicators show us that the pair is able to continue its way to the downside, although stochastic has reached low levels, and the pair may spend some time above this 50-day moving average before we'll get another swing to the downside and test off these bright blue weekly support levels. We can have a look at the 4-hour chart of the euro dollar as well. The general idea here is that the pair has breached the trend line last week, the trend line of January, and is now able to descend lower. We can see that there is the negative intersection of the moving averages on the 4-hour chart. The 50 period moving average, the brown line, is getting below the green moving average, the 100 period line. The pair is trying to recover and get above 200 period moving average, but for now we can see that it lacks momentum and is unable to close significantly higher. The previous candle on the 4-hour chart has a long upper shadow, a long upper wick, which shows us that there are sellers present in the area of 106.60, and here we find the short-term resistance line. A break above 106.60 will lead us to 107, and then the next resistance and the big resistance will be located in the area of 107.70. Here it is. 1 hour chart. Well, here we can see more of this slow downtrend as well. This was the technical picture for the euro, and as for the fundamental picture, we can state that political background for the European region looks tense. Investors are still worried that a far-right candidate will win French presidential election and take the country out of the euro area. In addition, there were some sharp commands from German Finance Minister Wolfgang Schäuble, who said that Greece should leave the euro area if it cannot fulfill its bailout commitments. So, for now, the markets are not seriously concerned with Greece, but questions may once again arise as the nation is still struggling to make its way through the different negotiations and payments to its creditors. So this is like a sleeping volcano for the euro. The economic calendar, as we have already said, contains some releases of GDP, German economic sentiment, and European economic forecasts. Also, the European Central Bank will publish accounts of its last monetary policy meeting on Thursday, and surely we will keep an eye on developments in the United States as well, like comments on Donald Trump and the Fed's chair Janet Yellen. So the main idea is that the single currency may try to consolidate above 106 for some time, but the next move will take the pair down to 105.67 and 105 areas. And if something happens and we see by any chance euro rising to 107.50, here is where we will look for a chance to re-establish our short positions, because we see that the daily 100-day moving average for the second time prevented the single currency from getting higher, and if once again the market tests this line, the odds are that they will likely get rejected to the downside.